Hi everybody, I'm Mike Cordova with Model Mortgage Express, here to talk to you about helping first-time home buyers decide whether or not to purchase a house. So one of the things that we want to talk about are some of the issues that first-time home buyers face, like lack of cash, they have lower income, lower credit, and I wanted to give you a couple examples of what you could purchase if you were, currently making a mortgage or a rent payment of $1,500 to $2,000 a month. Again, every situation is different. You want to talk to a loan officer about your specific situation, to know for sure if this works for you. But say we're talking about a generic buyer with a 700 credit score, and they wanted to purchase a condo. And in our example, we're going to use a $300,000 condo. You can get a conventional loan for as little as 3% down, which on a $300,000 purchase would be a loan amount of $291,000. Your principal and interest on that would be approximately $1,266. If your HOA payment was $200 and your taxes and insurance were $100 and then $30 for insurance, your total payment would be $1,596. So that's certainly doable if you're already making a rent payment of $1,500 a month, and your total cash outlay would be about $9,000 for a down payment and probably another $4,000 in closing costs. Now, say your credit score was a little worse than, say, 640, and you had to go FHA. That would only add maybe another $136 to the total payment, making it $1,732. Unfortunately, FHA has higher mortgage insurance costs, and that's reflected in that total payment. Example number 2, say you wanted to purchase a house, and we're going to use $400,000 in this example, 3% down. Your loan amount would be $388,000. Your principal and interest would be $1,688. Say your taxes were $175 a month. Your hazard insurance was $125. Your total payment would be $1,988. So you could potentially purchase a house with a payment of less than $2,000 a month. That's a hell of a lot better than throwing that $2,000 away on rent. If you were to go an FHA route on that situation, your payment would go up another $181, about $2,169. So again, it's doable, and it's a good option, something to think about down the road. So qualifying for a loan, what does it take to get a mortgage? I mean, how much do you have to make to get a mortgage of $2,000 a month? Well, when lenders are looking at two different ratios when they determine whether or not you qualify for that amount. They're looking at a front-end ratio, which is a combination of the housing costs divided by your gross income, and they're looking at a back-end ratio, which is your combined debt divided by your gross income. So ideally, they want a 28% front-end ratio and a 36% back-end ratio. So what does that mean? On a $2,000 a month housing cost, you would need to make $7,142, or approximately, that's gross per month, or approximately $86,000. Your back-end ratio, you could only have a total amount of payments of about $2,600 to be able to qualify. So those are the ratios that lenders are looking at. And that back-end ratio can go up if your credit score is higher. So in some cases, it could go up to the high 40% amount. So anyway, those are some ideas. If you have any questions, give me a call. My number is 720-323-5662. Again, this is Mike Cordova with Model Mortgage Express. Take care.